likely to go up. The common expectation and remarks that are coming from the central bank in Europe are that they are likely to go up by maybe twice in the next 3 months or so, and that's going up by probably about 0.5%. This will be the first time in almost 10 years that the ECB rate will have gone up. Reason for this is obviously well, where inflation is at in Europe and in Ireland. Well, in predominantly the ECB look after Europe first, but we follow. So this is it's happening, and it's going to happen in a very, very near future. So what are the impacts? What's it likely to have? Well, I suppose I'll start with, for those who are currently have a mortgage and have a fixed rate that might be ending in the next year, what I would suggest or recommend you do is get onto your own bank and just check to see if there is a breakout clause. If there's a small breakout clause, it may well be worth taking a new fixed rate for a longer period of time, even just with your current bank. Obviously, you could also look at what other offers are out there, but I would suggest putting a call in. For any of those who are on a variable rate, I would automatically be saying to you, look to fix your mortgage for whatever period of time you would deem appropriate. If it was me, I'd be taking possibly a 3 or 5 year view minimum on it. That's just my opinion, obviously, because I don't have a crystal ball here. The next impact the rates are likely to have, and there's possibly a good thing in a way, in that it should help stall price growth that's been happening. Obviously, what's likely to happen now is that the price differential between rent and mortgages will shorten, which will reduce demand for mortgages, and ultimately the banks may not be able to lend as much if the rates have gone up as well. So there could be basically a reduction in demand, which, coupled with the increase in supply that's happening, should if economic logic follows through, should basically mean that the price increases should basically cool off in the next maybe 6 to 12 months. Again, I don't want to pretend I'm an economist, but I obviously follow the market pretty closely, and that would be the likely expectation of what may happen. Next thing I would talk about then, obviously, with the potential increase in rates will be, well, obviously exceptions are off the table at the moment, but they may well come back later on the year. But if the rates have gone up, it just might be that little bit more difficult to get an exception. So it's certainly, I wouldn't say worrying times, but certainly rates are changing on what hadn't really been happening in any significant way in the last 10 years. So these are conversations that need to be had in much more detail now, because it's obviously something that it's now back on the horizon. So now, what else? Well, the property market, the demand has still been very, very high, but that, as I said, may taper off in the next six months or so, as long as the rate increase happen and it has the impact that I would anticipate. So interesting times, not what I'd like to be telling people about, but it's really, really important that people are aware that this is happening, and it will have, well, if they're about to buy a home, that they factor that in terms of the rate they're going to choose, or if they currently have a home, that you're kind of examine your existing rates at the moment and see would there be any benefit in either getting out of what you have and taking a new fixed rate, or if you're on a variable rate, fixing now for a longer period of time. So that's it for me. But if you have any questions that you want to ask me directly with regard to any of the information I've just given, just drop me a mail and we will take it from there. And hope to talk to you soon. Cheers. Thanks for listening.
I want you to get